Welcome back to the show as things get even harder for crypto going forward as the U.S. has choke point 2.0 in full throttle. Let me tell you, there are some very big things happening on a geopolitical level here today. There is more motion taking place between the BRICS coalition, Russia, and China. There's so much to see and so much to go over. Let's not waste any time. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Right now, $1.2 trillion market cap for crypto, and it's down 2.3%. Good afternoon. 27,500 for Bitcoin, 1759 and change for Ethereum. Tether market cap, 78.4 billion plus. Pay very close attention to that. XRP is 44 cents. We are up 22.6% on the 7-day, ladies and gentlemen. If you haven't done it, you're going to see some news today that's going to make you reflect and wonder why you haven't done it probably. And it's Glint Pay, baby. Yeah, get gold on your phone, physically allocated gold, not paper gold. And it's gold that you can buy, save, send, and spend right on your phone, right from your card. Get a MasterCard debit card and spend it anywhere that MasterCard is accepted. What a time to be able to have access to this. Click the link and see if it's right for you underneath the video. White House says Bitcoin has not announced plans to adopt proof of stake. Well, I think they don't know that there's not really a office to send a letter to. But this really goes into the idea that the White House is doing a huge crackdown. And they're really here saying honestly, what they're saying here is that they don't like proof of work is what they're saying, right? Let's not beat around the bush here. Proof of work does not align with the green agenda. And a year or two ago, Chris Larson came out personally and said that Bitcoin needs to make that move from proof of work to at least proof of stake to get out of the crosshairs of government. And he didn't say get out of crosshairs of government. I'm saying that because with the green agenda, that's exactly what it does for Bitcoin. It puts you right in the crosshairs because of the energy consumption. And that argument is only going to get stronger. But listen to this. Bank of America says it expects Ethereum adoption and usage to decelerate if the blockchain is not able to increase its throughput. Well, we've talked about this, right? Now, Ethereum's having issues, and it's dawning on the Bank of America. Talks about how they had the first early mover advantage, right? Ethereum blockchain remains a dominant operating system for decentralized finance or DeFi because few alternatives exist until recently. Bank of America said in a recent research report on Tuesday. The bank, however, said it expects Ethereum adoption to decelerate if the blockchain is not able to increase its throughput, adding the application developers will probably choose other networks to build on in crypto. Throughput refers to the number of transactions a blockchain can complete per second. And they say, we view Ethereum's long-term viability as dependent on its ability to fulfill the vision laid out in its roadmap, which includes implementing sharding architecture to expand its throughput capacity significantly. And it goes on to say, Bank of America noted that Ethereum's smart contract-enabled platform gave it a first-mover advantage as app developers gravitated to the platform, which led to network effects as the numbers of decentralized apps and users grew. The early success, however, has double-edged sword as the large number of transactions resulted in network congestion and surging transaction fees. This is what we've been saying. And now Bank of America is saying it. And don't forget that we also know that, before we move on, we also know that the New York Attorney General is absolutely suing KuCoin, suggesting and alleging, that Ethereum is a security. So don't forget that's happening at the same time. This is why I always remind people to watch out for USDTether, 78 billion plus market cap. It's getting bigger and bigger as crypto choke point 2.0 continues. almost as if government is corralling retail investors for the ultimate crypto collapse. I was talking about this last summer. What happens if you're in an altcoin and you don't have any way in or out of it other than USDTether? Let me just remind you very quickly again, the market cap is 78.4 billion plus. Scared money is sitting in Tether right now because everybody's afraid to move somewhere else, so they're holding what they got in Tether. You sure that's the place you want to be? The Department of Justice, the U.S. Treasury has not spoke on Tether, has not give a blessing to Tether. This is very, very real what we're talking about here. And it feels like to me, knowing that the SEC has just served a Wells notice to Coinbase, that we could be seeing even more money now funneling into USDTether, trying to figure out where to go or looking for a place to just hang out in a harbor, waiting for the market and the smoke to clear. But USDTether may get the biggest hit at some point in the very near term if they're going to rectify this market. Now, while that's happening, the Fed just raised rates by a quarter point to fight high inflation and signal greater uncertainty in the regular conventional markets and the economy alike, right, about future increases in banking stress. It also suggests that they may stall at some point if they only did 25 basis points. So we'll see, a quarter point. So here we see Caitlin Long reminds us here that America's banks are missing hundreds of billions of dollars. And that's going to continue, and the government is going to try to blame it on crypto being a systemic risk. This gentleman here, Mark Chaikin from Chaikin Analytics, says that he's got a method and a model they use that suggested 6 to 8 months from now, the market is going to be booming. Listen to what he says.
Well, we have a pattern that triggered for the 18th time since 1950. It's called a breakaway momentum signal. It was first developed by a guy named Walter Deemer, who was the chief technical analysis guru at Putnam Funds, worked at Merrill Lynch with Bob Farrell, and still going strong into his 80s, blogging on the stock market. Basically, the 10-day ratio of advancing stocks versus declining stocks skyrocketed in January 13th to be exact. That signal has triggered 17 previous times since 1950, and every single one of them, the market was higher 6 and 12 months later, and higher in a big way. And since that signal has triggered, a number of other technical signals have kicked in to confirm that.
So that's, look, that's what Marcus Chaikin is seeing there in the stock market. They're seeing a signal that's saying 6 to 8 months from now, we're going to see a huge run up. Now, I don't know what that means. I wanted to show it to you in contrast of what we're all seeing from where we're sitting. I don't know if Mark Chaikin, and this is not a slight to him, I don't know the man and I appreciate his insight. But whether we're talking about stocks or we're talking about the economy domestically or globally, I don't know if that model factors in what we're about to talk about now. Now, this goes, and I start here to show you how long the de-dollarization campaign has been going on around the world, certainly between Russia and China and the BRICS coalition. And this is from back in the 2014 time frame here. Not the whole thing. Just listen to a quick clip here.
Thanks for being with us, Max. Am I crazy, or is the West trying to downplay this deal just a little bit?
Well, Anissa, what we're seeing here is a transition from the petrodollar to the petro-ruble. So for decades now, the price of oil and gas has been priced in U.S. dollars. With this $400 billion deal with China, we now see a shift of the pricing in energy going toward Russia and China. This means the U.S. dollar as world reserve currency, its days are numbered. And this is also manifest in the actions by Russia this past month to almost quadruple their purchase of gold. So Russia's been buying gold every month for several years. They have now quadrupled that monthly purchase because they're getting ready for the time when the U.S. dollar starts to rapidly lose value against other currencies. Gold will start to be marked up aggressively. So both China and Russia have been buying gold. They're now going to price energy in something other than the U.S. dollar. So this is really the dawn of the petro-ruble.
And what's interesting is being 2014 there, they're going to price the oil in something other than just dollars, right? Well, that was 2014. A lot of people say, hey, he's talking out of his fanny. You know, that's not going to happen, right? Now, this is 2017, just real quick.
Well, first of all, they're very brave to do this because countries that have tried to exit the oil-dollar matrix have met terrible ends. Of course, Saddam Hussein wanted to trade oil in euros. He was killed. You had Muammar Gaddafi wanted to trade his energy in something other than U.S. dollars. He was killed. So the track record here is pretty dire. So kudos to China for taking this project on. You've got China and Russia and the Saudis are looking to escape the U.S. dollar hegemony. They're looking to de-dollarize. That's a concept we see all over the world right now as countries want to escape from the U.S. military-industrial complex. These countries around the world are tired of funding America's military adventurism by being a party to the empire of debt, as it's known around the world, the U.S. dollar, and they want to split off. They want their autonomy. They will fight back. They will start a war. You know.
And that's the concern, right? That is the concern. Now, let's take a look at some more recent news that's taken place here between Russia and China. And Russia to use the Chinese yuan instead of dollars to settle trade with Asia, Africa, and Latin America. Listen to this very quick clip here.
Я уже говорил, уже 2/3 товарооборота между нашими странами осуществляются в рублях и юанях. Мы за использование китайских юаней в расчетах между Российской Федерацией и странами Азии, Африки, Латинской Америки.
And there you have that. So that is expanding quickly right there. And then there's this right here, which we want to show you. This is actually China's President Xi and Putin, and basically saying goodbye to each other. And listen to what is said to one another and translated right here in this exit and their farewell after this meeting. China is coming, that hasn't happened. Change is coming, and that hasn't happened in 100 years, and we're driving this change together. He says, I agree. Please take care, my dear friend. Have a safe journey. Nothing else is said. He watches him and sees him off on his travel there. You know, there's even a deeper issue now too, and it's great to see peace happen all over the world, but you have to wonder what this really means. I want you to listen to this gentleman talk about the BRICS alliance and the yuan becoming the currency for trade with oil. We already know that Saudi Arabia has agreed to trade in yuan through the Shanghai exchange with China. And about the U.S. dollar will be thrown out as the reserve currency, a domino effect that would speed up from digital asset integration, especially liquidity assets. XRP Ledger, XLM, Stellar Lumen. Shout out to Merlin, Crypto Future Invest, and the person here in this, I think it's the Jordan Report. Take a listen to this clip, because now we got to think about the relationship between Saudi Arabia and Iran now.
News story over the past week has gotten virtually zero coverage, and that is the peace accord between Saudi Arabia and Iran. These two countries are sworn enemies. This is Sunni and Shiite Muslim. They're the two biggest players in the region, and they hate each other. But now they have an agreement for peace. And just as significant as the peace accord itself is who brokered it. China. That's right. China was able to achieve peace in the Middle East. China is seen now on the international stage as the adult in the room. But wait, there's more. The other important part about this is there has been rumors and ongoing conversations from Saudi Arabia about settling their oil trades in the yuan, China's currency, replacing the dollar. So the dollar's global reserve currency status would be thrown in serious question if the Saudis began transacting their settlements in yuan. On top of that, there are other rumors about Saudi Arabia and Iran joining the BRICS nation alliance, which is Brazil, Russia, India, and China, okay? If Saudi Arabia and Iran were to join the BRICS alliance, that would mean all of the major oil-producing countries in the world would be part of that alliance. They would also have about half of the global population. There isn't much need for the U.S. in that system. There is a new table being built before our eyes, and the United States does not have a seat at it.
And that's pretty accurate right there. And you have to wonder how it all plays out. And on national news, this is the first, and I don't watch cable television, but this has been sent to me. And I tell you, I have to wonder if the national news broadly here in the U.S., domestic news, is going to start covering this very important thing. But listen to this here, Tucker Carlson. Listen to this clip right here. Let me cue this up for us.
Let's imagine instead that we live somewhere completely different, in a country where the media felt obligated to tell you what was actually happening in the world and why it matters. What stories would we be talking about right now if we lived in that country? Well, here are the first two. Earlier this month, Iran and Saudi Arabia, the two most significant powers in the Muslim world, announced that after generations of proxy wars and snarling hostility to one another, they will be resuming diplomatic relations. Peace has broken out between blood enemies. As recently as last year, very few would have thought that could happen, and now it has happened. And it's happened, and here's a significant thing from an American perspective, it's happened because China, not the US State Department, but the communist Chinese government, brokered the deal. The world's largest atheist state has halted religious conflict between two theocracies. Did you see that coming? Probably not, but there's more. Yesterday, China's President Xi turned up in Moscow to announce a new partnership with Russia. Going forward, Russia will supply much of China's oil and natural gas. Vladimir Putin also agreed to use Chinese currency in trade with Asia, Africa, and Latin America. Once again, holy smokes. As with the Iran-Saudi summit, very few people imagined anything like this could happen just 18 months ago. Quote, change that hasn't happened in 100 years, Xi said, is coming, and we are driving this change together. Now, what change was Xi talking about? Well, the end of American global hegemony, the end of the US dollar as the world's reserve currency. For 100 years, he got it right, since the close of the First World War, the United States has been the preeminent nation on Earth. For 40 of those years, we were locked in a Cold War with the Soviet Union, of course, but at no time, no matter what they may have claimed, was there ever really a question about who was the most powerful country. We were the most powerful country. It was the American era. That era just ended, a little over 2 years into Joe Biden's presidency. But amazingly, no one in this country seems to notice that it happened. That story is not leading the news tonight.
And that is not a mistake. And one has to wonder if this doesn't paint a picture towards a black swan event that could fall into the category of maybe a dream scenario, as David Schwartz has talked about. Some kind of catalyst event that would kick off the importance of a bridge currency like XRP to handle the de-dollarization campaign that's happening from around the rest of the world right now. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.